Hi, this is Nikki James with Opus Advisors. We are a division of Flagstar Bank, and my NMLS number is 293138. And welcome back to my video series. This one is I'm going to talk about escrow. So escrow is a term that we use for a number of things, and I thought it was worth explaining the different things that we actually use the term escrow for. And this depends on which state you're in. So some states are escrow states and some aren't. So just know that if you're in a state that uses solicitors or attorneys, then this might not be relevant for you. But if you're in California or other states that use an escrow company, then this is. So escrow, what is it? So when you buy a house, you go into contract and you are considered in escrow. So you'll hear the terms escrow period, you're in escrow. And so we use that term for the length of time in which the contract is completed. So when you put in an offer, you'll say a close of escrow date of normally somewhere around 30 days from the date that you actually put in the offer, many times sooner than that too. That's the escrow period. During that period, we as a lender do a lot of due diligence. So we are looking for appraisal on the house. We want to see what house are we lending on. We're looking to see that you're still working. We look at your pay stubs again. We get updates. We get updated asset statements. There's lots of due diligence that we do during this period called the escrow period. So when you go into contract and you're pre-approved, you might think, oh, I'm done, but you're not. There's quite a lot of work that actually happens through that period of escrow. So you hear that term called when I'm in escrow. I'm in escrow, it means you're between the contract and actually owning the house. Now, escrow is actually the company. So an escrow company is an independent third party that acts on behalf of all of the parties to the transaction. And the parties to the transaction there's the lender, there's the buyer, you, and then there's the seller. And in a perfect world, we would all sit around a table and me as the lender would say, you can have my money, Mr. Seller or buyer, once I get my loan documents signed back that you're going to actually pay me back, buyer. The seller would say, great, you can have the ownership to the house once I get my money. And you as the buyer would say, great, you all can have your money and your signed loan papers once I get the ownership to the house. So we would sit around a table and say, okay, here's yours, here's yours, here's yours. Obviously that doesn't happen. At least in the escrow world, it doesn't happen. And so that's the function. Escrow acts as an independent third party to make sure everybody's instructions are met. So you as a buyer, do not release my money until I have ownership. Me as a lender, do not release my money until I have the signed loan papers. And the seller, do not give them ownership until I have my money. So that's the function of an escrow company. In Northern California, an escrow company also covers the title piece of a transaction. So when you buy a house, you want to make sure that you're going to be the owner to the house, that there's no old liens on the property, that there's nobody else who has a claim to the title. And so escrow's function in Northern California, also they wrap in the title insurance, and they will actually insure you that you are the owner to the house. They also insure us as a lender that we have first position priority in the event of a default. In Southern California, the companies just happen to be different. So you'll have an escrow company and then you'll have a title company. And it's just the way it is. So nothing more on that, except just to know that the escrow company acts in your behalf and everybody else's behalf. They are an independent third party. The other time that you'll hear escrows used is when you put less than 20% down. You are required to have an account called an escrow account, which is an independent account that is held for the sake of paying certain items that we take from you in your monthly mortgage payment. So when you put less than 20% down, not that we don't trust, but we want to make sure that the property taxes get paid and that the insurance gets paid. So we actually take money from you each month to put in this independent account called an escrow account to then pay those bills when they come due. When you put more than 20% down in California, you don't have to have an escrow account, but you can if you choose. Not many people do, but you could if you choose. The other term you may hear for this is impound account. We are impounding. We are taking from you those monthly payments. So you might hear it called an impound account. But essentially, those are the three ways you'll hear the term escrow used, and they're actually different, but we just kind of lump it in all. I'm in escrow. Here's my escrow company, and I have escrows on my loan. So that's the distinction there. When you have escrows on your loan, you're paying monthly for those items. So that was it. That's escrow for you. Fairly simple, but I thought it was worth distinguishing because often people get confused. And when you're a first-time home buyer and you hear of this term, when I first moved from England oodles of years ago, we don't have the term over there. And I remember getting a job for a builder, and I was the escrow manager. In about 3 weeks, I asked, what does escrow mean? So anyway, that's what escrow means. So thank you for joining me. I have more videos here on my site, so please take a look. And again, Nikki James with Opus Advisors, a division of Flagstar Bank. Thanks.